Hi everyone, welcome to this beginner's guide on investment in shares. If you've ever felt intimidated by all the jargon you hear about shares or about the stock markets, or you've ever wondered how can I really get started investing in stock markets, then this video is exactly for you. I am going to break down for you the basics and give you the confidence to start your journey towards financial growth and how to use the stock market as a source of passive income. My name is Belin. Welcome back, and please don't forget to press the subscribe button. I'm also going to request you to please engage me in the video. Ask me all the questions you'd like to ask as you listen through the video, and I'm certainly going to respond to you. Now, what are shares? Shares are a unit of equity of a company. Shares is a unit of ownership of a company. When you form a company, formed using capital. Now, that capital is contributed by different shareholders. Okay? It's contributed by different shareholders. Sometimes the shareholders can also be one. Once the company has been formed, the shareholder or the shareholders can sell off a portion of their ownership or even all the ownership, all the shares. Okay? So shares is a unit of ownership of a company. It's a unit of equity of a company. So then what is investment in shares? Investment in shares or investment in the stock market is when you, as an individual, buy the shares so that you also become an owner of that specific company, or you can buy and sell the shares so that becomes your trade. How can you buy the shares? For you to buy shares, you need to be having a CDSE account. And how do you have the CDSE account? You can open one through one of the stock brokers. A broker is someone who links one party of the transaction to the other party of the transaction. The brokers in this case are the people who links the buyers of shares and the sellers of shares. And shares are traded by NSE in a CDSE account, yeah? See, when you own Safaricom shares, there would have to be a record somewhere so that the other party who wants to buy can come and buy the shares from you. This record is done by NSE, Nairobi Stock Exchange, through a system called CDSE. So when you want to start investing in shares, you need to visit any of the stock brokers, listed stock brokers, preferably one that has an online trading platform. Open the CDSE account and then you're ready to start investing in shares. Like I've said before, shares are a unit of ownership of the company. There are some companies which are listed in the stock markets. That means there are some companies which are owned by the public. Anybody can own that company. You see, a company like Chandaria, it's a private company. I cannot become a part owner of Chandaria because it's not listed in the stock market. It's not a public company. Safaricom, on the other hand, is listed in the stock market. So I can become a part shareholder of Safaricom by buying Safaricom shares, and then I'll become a shareholder of Safaricom. And that means that whenever Safaricom makes profits, I can earn the profits through dividends. All right? I've told you the meaning of shares. I've explained to you the meaning of CDSE. I've told you the meaning of brokers. Now there's one juicy term that you also need to know called dividends. Why am I calling it juicy? Because it forms one of the reasons why we have an interest in investing in shares. So what are dividends? A dividend is a portion of the profits that the company makes, which is paid out to you. What do I mean by that? When you are a shareholder of the company, it means that you share in the profits of the company and you also share in the losses of the company. When you are a shareholder, it means that when the company makes profits and the company decides to pay out its shareholders or to reward its shareholders, that reward or a portion of that profit which is being paid out to you is called dividends. And that brings us to the question, how can you make money by trading in the stock market? There are two ways in which you can make money by trading in the stock market. The first option or the first way is called a capital gain. A capital gain. What's a capital gain? A capital gain is a positive change in the share price. Positive because it becomes better. It's an increase in the share price. If you buy shares at a specific price and then after some time the prices of that shares increases, the difference in this price is what is called a capital gain. You'll have essentially made money. Your asset value will have increased. Let me explain that further. If, for instance, you had bought Coop shares when the share price was 12 shillings, say you bought 100,000 shares or 10,000 shares when the share price was 12 shillings, yeah? You'll have spent 120,000 shillings. That is 10,000 times 12. You'll have spent 120,000 shillings. So your investment will be valued at 120 because that is the price of the shares. And then a few months or a few weeks or a few days down the line, if the share price for Cooperative Bank or for Coop Bank increases from 12 shillings to 16 shillings, I'm not saying that's what the price increase is going to be, I'm just explaining, yeah? If the share price increases from 12 shillings to 16 shillings, it means that your share will now be valued at 16 times 10,000 shares that you're holding, which is 160. So your value, your asset value or your wealth value will have increased from 120,000 shillings to 160,000 shillings. So this difference of 160 minus 120, which is 40,000 shillings, is called your capital gain. Should you decide to sell your shares at the point where the price has increased to 160,000 shillings, you will have made a profit or a capital gain of 40 shillings. So when you're trading in the stock markets, you can make a capital gain. You can make profits through capital gains. It also follows that when you're trading in the stock market, you can make capital losses. How is that? If you bought the shares at 16 shillings per share and the share prices drop to say 13 shillings, that price drop of 3 shillings is going to be your loss. All right? Another way of making money in the stock market is through dividends. What is dividends? A dividend is a portion of the profits that the company pays out to you. If a company makes, say, 1 billion profits, and then it decides to pay out like 50% of that profit to its shareholders, the portion that you'll be receiving from this 500,000 is called a dividend. All right? So you can make money through capital gain and you can also make money through dividends. Now, if you decide to invest in the stock markets and you are a beginner, If you don't have the knowledge on how to make capital gains, you can utilize the knowledge, skills, and experience of investment bankers or your stockbrokers. They have the ability or the knowledge to study the markets and know when there's going to be a price increase or a price decline. They can give you sound financial advice on when to buy and when to sell. They might not always be 100% correct, but you can be sure that you'll have higher chances of making more capital gains as opposed to when you're trading alone. If you are new into investment in shares and you want to start investing in shares and you have a substantial amount, sorry about that, and you have a substantial amount, say 1 million, 100,000, whatever amount that you want to invest, I would highly recommend that you enlist the services of a professional, of an investment banker or a stockbroker who will give you good advice on the stocks to buy, when to buy, and when to dispose. However, if you don't have that lump sum amount and you still want to invest in shares, nothing stops you. You can buy the shares yourself gradually as and when you have the money. So how can you start investing in shares, or how can you start buying shares? The minimal amount of shares that you need to buy for any company that is listed in the stock market is 100 shares. At any one time, if you ever need to buy shares, the least amount you can buy is 100 shares. So then how much do you need to start investing in the stock markets? Or how much do you need for you to buy shares? Is there a specific amount? No. There's no correct answer to how much. Why? Because it will depend on the share price of the specific stock that you're buying. If you're buying a share that is priced at 13 shillings on the date of purchase and you're doing the minimum, then 100 times 13 is 1,300 shillings. So you'll need a minimum of 1,300 plus, of course, the brokerage fees to start investing. However, if you want to go for the high priced shares like the EABLs or the Kakuzis or Stanchart or those shares which are priced at maybe 200 shillings, and remember the minimum share amount remains constant, 100 shillings. So if you're buying a high value share of say 200,000 or maybe 400, sorry, not 200,000, 200 shillings, or maybe 400 shillings, 400 times 100 is 40,000 shillings. So you can start with either 40,000 shillings or 1,300 shillings, depending on the share price. Do you think you'll be interested in investing in the stock market? Are you investing in the stock market already? If you are, what are your experiences like? The stock market is a good place to build your wealth. It's a good place to invest in, and the profits can be humongous depending on how well you trade or how well you play your cards. Don't forget to subscribe to this channel so that you don't miss out on the other videos that I'll be uploading.